Interest rates are the catalyst. Interest rates are the linchpin. If central banks actually do what they promise in 2018 and reduce their monetary easing, the entire global stock market will begin to crash. If they decide to leave rates low and perhaps print more money, central banks will create a quickened destruction of the value of their currencies that we are forced to use as legal tender. This isn't going to end well. You came here for the truth, so let me unveil that for you. Today we're going to look at why the Fed and other central banks can't raise rates. Let's begin. We are looking at the S&P 500 and interest rates versus the composite CPI, GDP, wages, and savings. And take a look at the blue line. That's the S&P 500, and we have seen it over the years and how it has risen. This chart goes back from 1959 up until present day, and you will see that clearly as time goes on, the S&P has definitely brought itself to new highs. You will also notice that there is something that happens every time there is a spike. The 10-year Treasury constant maturity rate, as well as the composite indicator, we're looking at these here. Whenever you see this spike in activity, you will see a crash that occurs. The spike occurs and the crash follows. This time around, we have seen it rise. Will it come down? Well, it's interesting because the market has been in complete sync, and this is what I've talked about many times before. Since the year 2000, everything has moved in lockstep. It is completely in sync. You will see this apparent in literally hundreds of different indicators. Since then, .com, financial crisis, and today, everything is a mirror image of what it was the previous two instances. It's been worse in some cases that I've shown you, but ultimately, when you really break it down, we're basically entering the same level of euphoria that was experienced the previous two times. Something happened in the year 2000. Many have speculated what it could be. I don't know exactly, but I know that at that moment, something really changed, and it became even more apparent during the financial crisis, and now today we will see that happen yet again. It's something to look at, it's something to pay attention to. This is just one indicator. Do not put all your faith in this. It is just one, but I've shown you, as I've mentioned, hundreds of different ones, and the people don't care. Even though we've seen so many things pile up, the average person who is invested in the market will ignore it, and that's okay. You can do that because for the time being, the market's going to go up. Until something changes, if central banks are willing to destroy the currency, they could print it into oblivion and the market can go to, the S&P, no telling where, 10,000, 20,000, 50,000. I mean, if you're going to hyperinflate the currency, there is no maximum to how far it will go. So in that case, you don't want to be holding on to cash. You want to be holding on to anything, because anything is going to be better than cash in that place. But it all depends on what you believe is going to occur. Mike Maloney, I agree with him that there will first be a deflation, and that deflation is going to be real. But then the central banks are going to come in and they're going to ramp up the printing presses, and they will do so in haste, and they'll destroy the currencies. Total system leverage, government, corporate, household, margin, banks, guess what? It's increased. Does that surprise you? Does that surprise anybody? Total system leverage is the red line, completely in lockstep with the S&P. We have shown you here how margin is up to a level it has never been before. We are looking at leverage in general being so far beyond what can be considered normal, and as a result, we have abnormal levels that are occurring. This channel is all about the truth. What you do with it, that's up to you. But when you look at leverage like this, you have to understand what happens afterwards. Look, it might come later on, but look at this spike upwards. People want to talk about cryptos. Look at what has happened over the last year. It has escalated to an extremely high level. And look, before the end of it, we could have a straight line that occurs. A straight line up. But I assure you, the line on the way down is going to seem even more aggressive. Look at this. The winner takes almost all. Oxfam report on the rich-poor divide. Reward work, not wealth. That's what they say. You know, what's funny about this is that we have these so-called powerful people that are in place in Davos, and they go there to speak in front of these conferences. They have this talk. It's basically the publicized version of Bilderberg. They've recommended before in history a $100 trillion bazooka to fix the problem. Doesn't really matter. Anyway, the richest 1% raked in 82% of the wealth created last year. We are going to see more and more billionaires as time goes on. It's not just in the US, you're seeing them in China, you're seeing them in other places, and ultimately more wealth is being created, more wealth is really put into the hands of fewer and fewer people. You're seeing more conglomerates taking over, and it is those times of crisis where people are able to get very, very rich. But it's not the average Joe who can get more rich. It is the big billionaires, the big corporations, and all of those who are interconnected with government, corporations, and the like. 42 people own the same amount of wealth as the poorest 3.7 billion people. Think about that for a second. You can easily get 40 people in a room, and yet they have the most wealth when you compare it to 3.7 billion people. I mean, that is something to think about. The richest 1% in the world are evading an estimated $200 billion a year of tax. And that's something that, unfortunately, they propose individuals have to pay their fair share, but the big billionaires, the big corporations, they're not paying, and they never will. Since 2015, the richest 1% has owned more wealth than the other 99% of the planet. And then you have this. This is part of that report. Oxfam, right from their website. Last year saw the biggest increase in billionaires in history, one more every 2 days. Billionaires saw their wealth increase by $762 billion in 12 months. This huge increase could have ended global extreme poverty 7 times over. 82% of all wealth created in the last year went to the top 1%, while the bottom 50% saw no increase at all. Many people are losing out as the days go on. There's a lot of people chasing what's happening here with institutional investors, going into equities, others going into real estate. And ultimately what's happening here is a dislocation between those that are profiting off of the rise in everything that's happening with central banks, but then there are those who are simply not able to invest for one reason or another, and they are unfortunately going to be worse off the next time around that there is a recession. Netflix, okay, something that I've talked about before. They are constantly spending more and more money, but their shares are soaring to all-time record highs. It continues to happen. Netflix non-GAAP free cash flow, you can see here, the font is quite blurry, but essentially we're looking at a company that burns through so much cash, it's an incinerator. But let's not look at that. Let's, hold on, pretend you didn't see that, cover that up. Here, Cover that up, put an X across it. Okay, let's not do that. Sorry everyone, sorry about that. Right here, let's just focus on this. Shares soar to all-time highs. Okay, everybody breathe into the paper bag. Calm. Everyone is fine. I apologize for showing you the truth. Just look at this. This is all you need to know. You can sleep tight. Everybody feel calm, relaxed, breathe. What you are seeing is all you need to know. Don't look at the other information. Don't look at the other tab. Let's skip that tab. Let's end the video there with a thumbs up.